Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, coming to you with your morning market preparation video for January 3rd, 2018. Well, the first trading day of the trading year, the bulls decided to get inspired. And it really doesn't show much here, but I can show you on a short-term chart. All of a sudden at the end of the day, the bulls seem to get a little inspiration wanting to move higher. And right now, as I do this video, futures are pointing to about a 40-point gap up in the Dow, which is going to put us really close to a breakout of this consolidation. Whether it can actually do that or not, I'm not going to predict that's going to happen. We do have economic news today that could move us around in either direction. So we'll talk about that here in just a second. But on the very first trading day of the year, the SPY managed a breakout of the consolidation, setting a brand new record high print on the very first day of the year. And followed very closely behind is the NASDAQ. The NASDAQ had a complete reversal. Remember I said yesterday, my biggest concern was the NASDAQ for potentially selling off. And boom, complete reversal here on a couple of analyst upgrades. Really turned the NASDAQ around. And the Qs look higher, and I would suspect a new record high print comes very, very soon here in the Qs. IWM, most of the day was bearish, showing, just a chop, bearishness chop, and then got really inspired here again toward the end of the day, like the rest of the market did, reversing that, showing bullishness here. Now, this is still in a consolidation area. It hasn't broken out yet, nor has the diamonds. The diamonds have not broken out. We could simply continue moving sideways in this price action if we can't break out. Let's keep in mind that a Dow print of 25,000 is not that far away, and that should be drawing hard on that index. Clearly the bulls are in control. They want to keep pushing higher, so we'll have to keep a close eye on that. You certainly don't want to be bearish or trying to short this market at the moment. There's no indication that we should be short, and the bulls are clearly still in control. Let's take a quick look at the VIX here. The VIX made an interesting reversal yesterday, and really most of this happened in the last part of the day. And notice we could easily slip back down here into historic low areas here on the market. We're below 10 here on the VIX. There's no fear in this market, and it seems like the bulls may have a clear path higher very soon, as long as we don't end up with a bunch of economic data that causes us a problem. We'll talk about that in just a second. If we take a look at T2122, T2122 is putting us in this really pretty darn good position to move higher. You can see we're significantly away from the bearish reversal zone. Notice we have a little trend going on here on these lows, moving on up, and I would not be surprised to see us move on up into this area here before the end of the week. Now, of course, economic news could definitely change that. Saber rattling between U.S. and North Korea could certainly change that. All these things that are out there could definitely affect that. So don't take this as gospel or even trying to predict that we're going to go higher. It just seems like all signs are pointing to the possibility of a higher market. So watch that carefully as we move forward and try not to anticipate any kind of a short here. I've seen so many people trying to get short, just assuming that the market has to fall. And I think the market's kind of proving that's not the case here at the moment. Today we have on the economic calendar. In the economic calendar, we have the ISM Manufacturing Index that is expected to hold up extremely well, showing a lot of strength here in the ISM. I don't expect that to hurt the market at all. Construction spending has remained very strong, and with residential construction spending really driving that index or that number higher, and is expected to hold up very strong on this reading as well. And then, we do have the FOMC minutes at 2 p.m. And this is the possible hang-up today. It's fairly typical for the market to kind of go into a sideways, choppy price action, as the market waits on that FOMC report. When that number comes out, expect volatility to increase for a short period of time at least as the market digests that information. And then we'll have to see, where we go from there. Now, we still have some big stuff on the calendar here. And really, this one right here is kind of the Mac Daddy of all economic reports. And we could easily see the market kind of just continue to wrestle around going sideways as we wait for, this number. So remember, anything is possible in the market. I just don't see any significant bearish action to get worried about here, but anything is possible. We could chop around sideways. We could lose the momentum game that we had yesterday, just simply because we're waiting on this and we're waiting on this. So watch that closely. Now, one thing that's going to be important is oil has been looking very, very good here. And yesterday you could just about have thrown a dart at a list of oil stocks and made money. This will be really important come Thursday. So we'll want to keep an eye on that report as well, because if that were to show some kind of a surprise, a surprising increase in supplies and a reduction in demand, then those oil prices could slip very quickly. So kind of keep an eye on that as well. Lots of important stuff going on here in the market. On the on the earnings calendar, we have about 13 companies reporting earnings today. Companies like, before the market, we have like CMC reporting here before the market open. Looks like it may have already reported and is gapping higher on CMC. UNF is another one of the kind of the notables reporting this morning. I don't see any evidence that it has reported yet today, so kind of keep an eye on that. After the market close, we have a couple of companies maybe to take note of, like RAD reporting right after the market closes today, so kind of keep an eye on that. Not that these are going to move the market around, but if you're in these trades, you want to pay attention to that, be prepared, have a plan, and don't get caught on the wrong side of these trades. Let's take a look here once again at that VIX, and just note that the VIX is extremely low, and the VIX can respond very quickly higher if fear does come into this market. But we could also see this VIX really take off for these lows if we get some bullish information out there. So keep that in mind as we go forward. We're really pinching this. If we look at a weekly, we're pinching this into a narrow and narrower range, One of these days, this will explode one direction or the other. I have no idea which one, but you would be wise to just kind of keep an eye on the VIX. Don't worry about it a lot, but just kind of keep an eye on it as you're planning your trading going forward. Hey folks, if this is the first time you've seen this information, this is something I put out every single day. This is, I believe, preparation is far more important than anything else. If you prepare for your trading day, if you prepare to be successful, you have a better chance of being successful in trading. So if you find this useful, please feel free to share this with anyone, any of your friends, family, anyone, if you think it might help them. I put it out free every day on my YouTube channel, and I also place it on Facebook. If you have the inclination, please do me a favor and click on that subscribe button on YouTube and the follow me button on Facebook. And please click those thumbs up buttons. I really do appreciate it. And drop a comment. Everyone have a fantastic day. I wish you great profits. We'll talk to you all very, very soon, bright and early tomorrow morning. Take care, everyone.